You're watching BizAsia America. I'm Michelle McCory at the NASDAQ market site. A new Chinese tech company has gone public in New York City. Online classifieds marketplace 58.com, described as the Craigslist of China, debuted on the New York Stock Exchange today to a very warm reception by investors. And CCTV's Liling 10 joins me live here at the NASDAQ with all the details. A big day for 58.com, Liling.
Yes, Michelle, it's been described as the Craigslist of China, yes, but 58.com is actually considerably larger in both scope and skill, which is why it did so well when it debuted, when it kicked off its IPO at the NYSE this session. It did price its shares at $17 and it opened the session at $21.20, but it closed the day up slightly more than $24, which is a 42% spike on its first day of trading. So we're talking about a solid rally on a debut. And here's looking at why this Chinese company is all the rage now. Ringing the bell at the New York Stock Exchange, 58.com senior executives and lead investors soon took to the trading floor for the excitement of the first trades of the day.
2.1 million.
Within minutes, the stock began to climb and climb, signaling strong investor interest in the shares of this 8-year-old Chinese company, which opted to list in the U.S. instead of back home.
The U.S. is the most mature capital market in the world. Besides, our business concept is no stranger here, as there are also many successful companies like Yelp and Angie's List, which are similar to us. That's why we chose to list in the U.S. We are warmly welcomed here, as you can see today.
That was expected because 58.com is the go-to site in China for rentals, job postings, secondhand goods, and classified ads. That makes it a lot bigger than Craigslist because of the size of China's market.
You can really search for many types of things really quickly on 58.com. I also find the listings informative.
The site is pretty comprehensive in terms of its product offering. I had in the past looked for jobs and bought stuff.
Despite the vast number of monthly visitors to the site, 58.com only posted net earnings of $300,000 on $59 million in revenues in the first half of the year.
We may not be a successful company in terms of revenue, but we have built a huge customer base, around 130 million monthly users. That means 1 out of every 3 to 4 Chinese netizens would visit us at least once per month. They're the most valuable assets of our company.
True, provided 58.com can persuade visitors to pay for its services. The CEO is confident he can find a revenue model to generate bigger profits. U.S. investors have also been concerned by stories about accounting fraud by some Chinese companies going public here. Hearst Lin of venture capital firm DCM, the IPO's lead investor, says there's little to worry about.
I think from time to time, there's always going to be 1 or 2 bad apples that jumps out that makes everyone kind of take a step back. But then after time passes, people realize that one bad apple does not make the whole batch bad.
And it does appear that U.S. investors may be warming up to Chinese companies looking to list here in the U.S. in part because of all the money that they've made from them. And of course, Michelle, we know we've heard of the social networking site YY, the Chinese social networking site YY. It generated more than $90 million when it IPO'd in 2012. And Sinocorp, which operates microblogging site Weibo, its shares are up 60%.
Okay, so Liling, between those two companies and the big debut of 58.com up 42% today, is this a sign that the cloud is lifting over Chinese companies listing in the U.S., or is it more of a case of the potential to make money overriding concerns about accounting and auditing practices in Chinese companies?
Well, those concerns seem to be lifting to some degree. I spoke to the IPO expert Kathleen Smith of Renaissance Capital earlier this session, and she said that there are still concerns. U.S. investors are still concerned about accounting issues with Chinese companies, as well as economic growth in China, but they want to own large, new, fast-growing Chinese companies. And in terms of governance, they are looking more closely at management, ownership, and accounting statements. And also on 58.com, she did say that while this company is in a leading position in a fast-growing market, It is operating in a highly intense internet industry, and its short profitability track record needs to be considered. But in terms of interest, there are other IPOs coming up, other Chinese companies looking to list here. We've heard a lot of interest, a lot of buzz in capital markets here in the US over Baidu's travel site Qunar, which literally translates as go where, or roughly speaking, where do we go? It lists on the Nasdaq Stock Exchange in just a matter of hours, Friday here in the United States. Also expected to generate a lot of US investor interest. And of course, there's Alibaba, which we've been talking about for months, although there's some uncertainty now whether it will eventually list here or back home in Asia.
That's right, Alibaba, big news. Liling, thank you so much.